and let's put the spotlight on Dehaat. In fact, it's a full-stack agri-tech platform that's announced its earnings for the quarter gone by. In fact, the company said that it has achieved enterprise-level profitability at level for Q1 of FY26. This is following a profitable March FY25. In fact, in FY25, Dehaat recorded a consolidated revenue of 3,000 crores. It delivered an 11% year-on-year growth, and this momentum has carried forward into Q1 of FY26, with the company reporting an ARR of INR 4,000 crores. In fact, the company, it raised around over $200 million to date. It operates in 12 agrarian states. It boasts of a network of over 18,000 centers and 90 hubs. And through these hubs, it operates in 120 districts and caters to around 13 million farmers. The company, remember, is in the process of raising fresh capital to accelerate its growth plans. In fact, to talk more about the company's growth plans and the earnings for the company, we're now joined by Shashank Kumar, the co-founder and CEO of Dehaat. Thank you very much, Shashank, for speaking to us here on ET Now. First things first, what were the key drivers behind Dehaat achieving profitability this quarter? Was it domestic consumption or exports?
No, it's just that we are following our ongoing trajectory. 2 years ago, when we achieved the scale of 2,000 crore annual revenue, we integrated a number of high margin segments on our existing revenue streams, whether the agri-input or the output. But long story short, on the input side, we integrated a number of exclusive and private label sustainable agricultural inputs, which became first margin driver and which grew by almost 4x in last 2 years. And then at the same time, on the output side, we integrated a lot of high margin segments such as direct export to almost 32 countries, food processing, and the storage as a solution to our existing institutional buyers. And that became another margin driver, and that also grew by almost 3.5x in last 18 months. And these two were the major margin driver to ensure Q1 as a profitable quarter for Dehaat.
Right. So when we talk about Q1 as a profitable quarter, is this profitability sustainable, given that it was driven by one-time factors, or was it driven by business improvements?
Not really. It's part of our ongoing trajectory. As you must be aware that at Dehaat, we have built a crop agnostic solution. It has nothing to do with any specific crop or any specific geography. And that's the reason why we evolved as a largest full stack platform in agritech in India. So the best part is that for every single quarter, we have ample of high margin drivers on both the revenue streams, whether it's input or output. At the same time, there is no, as such, there is no concentration on any specific crop or geography within Dehaat as we speak. And that's the reason this is going to be the same in subsequent quarter. And that's the reason we are talking about FY26 as a full profitable year.
Right, Shashank, are there any specific financial metrics or operational challenges or segments that contributed most to this profitability?
So we always believe in building a holistic solution for farmers at one side, and at the same time for the institutional buyers such as FMCG players or the global retail outlets on the another side. And that's the reason why on the platform we have integrated ample of various or different offerings and solutions. And the good part is that all these solutions basically again contributing in a pretty uniform manner. So it's not that any specific element contributed or any specific factor actually which worked in the favor. And that's the reason why again as I mentioned that it's and the best part is that being a horizontal platform, there are a number of levers, number of revenue streams we have already integrated on the platform. So that's where, let's say, agri as a sector, which always has some degree of uncertainty, but then within the platform itself, we have number of other solutions to cover it up. And that's where, again, we have reached to this stage of maturity.
All right, Shashank. So let's now then talk about the growth expectations that you have for the company. And how do you plan to balance profitability with growth for the company going forward?
Well, so last financial year, we did business of 3,000 crore, FY25 I'm talking about. But in the current financial year, we are all set to have yet another year with 30% annual growth. The way we have onboarded almost 10 million farmers, the way we have built our own captive first mile supply chain through our 15,000 Dehaat centers, the way we have understood and solved most of the agricultural crops and its respective value chain to solve the inefficiencies. The way we have already onboarded hundreds of institutional buyers within domestic as well as overseas market. We feel that I think there are a number of growth levers we have on the platform, and this is not even just the scratching the surface, and that's the reason why in the current financial year FY26, not just we are talking about 4,000 crore business, but at the same time, even after that, we are aiming for another 3x growth in the next 4 to 5 years.
Right. Give us a sense of the market share that you're currently at, and how do you plan to expand that?
Well, we believe that the fundamental supply chain, which connects the Indian smallholders and the number of agricultural businesses, whether they have input solution or the output requirement, that supply chain as a framework, as a funnel, we have already built. And then if you look at that, at one end of supply chain, we have 10 million farmers onboarded. And the another end of supply chain, we have hundreds of these institutional buyers and the agri-input companies to transact on the platform. It's encouraging to see the scale and the number we have reached. It's equally encouraging to see the way how we have scaled up these solutions to almost 130,000 villages of India. But yes, the another way to look at, or the another lens, is that the current wallet share, what Dehaat is serving, whether the farmer or these buyers, that's not even 10%. And that itself basically again talks about the future growth lever. In terms of geographies, we don't have our deeper footprints in states like Gujarat and down south. And that's the way, again, within, in and around the existing solutions and the capability, there are enough growth levers to maximize the wallet share of our farmers as well as the buyers or the crops we are actually catering to.
Right, Shashank. So let's talk about, of course, you've spoken about growth, you've spoken about expansion and what you're planning for the company, but let's also talk about your plans of looking at an IPO for the company. What's a realistic timeline that you're looking at as far as an IPO for Dehaat is concerned?
2 years from now. Well, so as you just heard, right, that that we are still growing in a phenomenal manner, and not just the revenue, but also the bottom line. So at least for next 18 to 20 months, we want to stay focused towards growth trajectory, the way how amazingly our entire team Dehaat is executing, whether the input side, whether the data-driven crop advisory solutions, bringing more and more offerings for farmers, or the output side, whether it's export or processing or storage. Number of crops we have started, such as spices as a large category. We've just started. Few of the continents on the global market we have just started supplying to. So it's I think we still see and we still want to stay focused on this trajectory. Yes, definitely IPO is a milestone, has to be achieved. We feel that I think 2 years from now would be good time to start heading in that direction.
All right. Thank you very much, Shashank, for taking the time out and speaking to us here on ET Now. 2 years from now is essentially when you're looking at an IPO for Dehaat. Well, on that note, thank you very much for taking the time out, and congratulations to you for the stellar numbers that you've clocked for the quarter gone by. Ladies and gentlemen, it's time for us to slip into a very short break, but you don't go anywhere. We'll be right back.